All right, everybody, welcome back to, I guess it's been a minute since we've done this. Not for, well, for all three of us, we've done these before, but if this is your first time, welcome to the reboot of the Trading Battle. I'm excited to be here. If you've never been to a Trading Battle before, I can see we've got a bunch of people who just joined already. Thank you for being here. So the Trading Battle, if you've never been here before, the main goal of the Trading Battle is all in the name. Our primary focus here is to trade markets live on YouTube, especially in such a critical moment right before the Fed makes some big decisions and lays out their game plan for interest rates for the rest of this year. Joining me on today's battle is our two contestants, and I'm going to do a quick introduction and let them say hello, and then we're going to jump right into the action. As we get started, if you could do us a big favor here at the Trading Battle, make sure to hit the thumbs up button and subscribe to the channel down below. And without further ado, let's get into saying a quick hello to each one of our guests or our competitors here. First up is going to be Blake Morrow here. You can see their names, of course. Chris Pulver. We only have two contestants, but Chris Pulver brings his dog for backup. So we've got he's
going to need it. He's going to need it.
Yeah, right. So our first contestant is Blake Morrow. He's a Forex trader with only over 20 years experience trading equities and Forex. And he's been able to turn 20,000 into 1.5 million. As well, here's some roles behind the scenes. He's a co-founder and CEO of Forex Analytics, the co-founder of Traders Summit, former chief currency strategist at Wise Trade. Blake, how you doing? Welcome back to the Trading Battle.
Thanks for having me, and good to see you, Nick, and obviously Chris. Great to see you. We didn't bring out the boxing gloves this time around.
Not this time. I know. We'll have to save that for round two. It's good to have you back on the show as well, of course, Blake. And we had a lot of fun doing this last time. When I heard from the Trading Battle team that they were ready for this battle, I was pumped because having this combined experience between the three of us, I got some catching up to do to get to you guys' level. I'm not quite at 20 plus years, but combined experience on the screen right now is like 50 plus years of trading experience, which is really exciting. And hopefully we can add some value to our audience here. Let's go ahead and introduce the other guy here, Blake. Your competitor here now will be taking a look at his credentials here, Mr. Chris Pulver. Chris, how you doing?
Doing well as always. Just fresh out of like session number 5 today, so ready to take this into the close. That should be exciting, man.
Spoken like a true trader. So Chris Pulver has, like I mentioned earlier, over 20 years of experience, also trading a good mix of stocks, options, Forex, and cryptos. He's a professional money manager, hosts the Pulver Report on YouTube, has his own channel, has his own content. Same does Blake as well, and does live trading, as he just mentioned, every day of the week, constantly on air. And good to have you on for another Trading Battle, Chris.
Yeah, is this not the throwback to like Trade Battle number 1, Blake? I think you and I were like the OG Trading Battle. Yeah,
we are the OGs, and I think it was Trading Battle number 1 or 2. Might have been number 2.
Yeah. Okay.
Yeah, but yes,
that's awesome.
Definitely old school. Good to be back in the ring with you.
Absolutely.
Yeah,
make it a clean fight. Make it a clean fight.
Yeah, exactly.
Yeah.
Keep it clean here, guys. So primary goal for everybody listening, as I just got done explaining a little bit, is we're going to be trading these markets live, and we got to jump right into it because we've got the Fed statement, press conference, all of that happening within the next 1 hour. And going up to the bell there, where we right before the press conference, we're going to be laying out some strategies or some competitions for these two to go head to head on. So without further ado, I want to just give each of you guys maybe just like 1 minute quickly to go over what your primary focus is in this market right now. Maybe Chris, you could start us off. Give us a high level view of just kind of going into the Trading Battle. What's your bias ahead of the Fed meeting here today?
Well, I think that in typical Fed fashion, when there's not really expected to be a surprise anything, the rate cut's supposed to be a pause. I think that this is going to be a noisy FOMC day. I think the market's going to be paying very close attention to everything Powell says. So to me, the 2 o'clock reaction is going to be mostly noise. I think it's going to be from 2:30 to close, where a lot of the excitement happens. We also have a holiday tomorrow where the U.S. markets are closed. So that's why we decided, in the background, that we're trading today, holding through the holiday, and trying to see who can, end up making the most profit through Friday end of day. So my plan is to kind of trade the market both ways and see if I can let my winners run. That's going to be my strategy for today, because I think what this will bring is some volatility. If we start to see, like, today's a noisy day and then a little push on Friday gives us our runs for our winners. I know we have an exciting kind of list of rules of how we're going to trade, but I'm going to try to trade, like, I'll win some, lose some, but if I net profit, that's the goal. And hopefully I can carve out some net profit that makes it a dub.
So, Chris, let me ask you this, because, you know, for people who are maybe newer to seeing your content, I know pretty well, I'm sure Blake does as well. You're heavy on options, and you love trading kind of volatility. Are you thinking more so along the lines of, you think there's capped movement in either direction for a lot of stuff, or do you think that there could be some surprise or some unexpected bigger moves, whether it be currencies, indices? What's your thought there? Do you expect?
Yeah, it's a great question. I think that the key level to watch today is last Friday's low. So think about what this market did in the last week, or 2 weeks rather. We shrugged off Musk and Trump fighting. We shrugged off a new hotspot in the Middle East. We did have this low. We saw a 40+% spike off the lows in oil. This level at 59.60, 59.62 on the SPX, to me, is going to be the most important level, because if we break that, that means that we are taking out last week's low. We're taking out last week's Friday close. And to me, I go back to how kind of technically overbought we have been these last couple of weeks, just melting up higher, drifting higher. I see a lot of overbought conditions. I see a lot of diversions. I see a weakening bull market. I see a lot of hidden bearish diversion. So if the bears can take out 59.60 today on the S&P, I think we have room to drop back into, you know, that U.S.-China trade agreement gap, which is probably close to like a 4 to 7% correction. It's not going to happen in one day, I don't think. The biggest price action surprise today would be if Powell goes off script. And that's always been the case. I mean, honestly, Nick, the last time that he probably did that was December of last year. That was when the Fed really had the biggest reaction during an FOMC day. And really, he just started talking about inflation, and started going just kind of off the cuff, which usually he's very scripted on what he says, because he's able to talk kind of both sides and keep like almost like a neutral tone, while saying, yes, we could cut, but maybe we won't, right? Maybe it's like talks out of both sides of his mouth. So I personally like Powell. I think he's been a good chair for these couple of years. They're obviously getting a lot of criticism on what the Fed should have done last year, didn't do last year. They cut 100 basis points and the market reacted differently. I mean, we had the bond yields go up, and there's an interesting saying, I've talked about this the last couple of weeks: the government can continue to spend until the bond market takes away the keys. So one thing that happens in 2025 is I think the bond market is going to kind of hold the market responsible for, if the Fed wants to cut, we want to try to, you know, grow and melt up and have quantitative easing. The bond market, the bond yields will really tell us whether or not we can afford to do that. Because if we see yields go up to, 5% in the 10-year, 5.5%, 6% in the 20-year, I don't think we can grow our way through that. I really don't, not the deficits that we have. So Powell's probably going to stand firm. I don't think he likes to cater to Trump at all, and which is why they're talking about replacing him. I mean, I saw there's some front running with, I think it was Christopher Wallen was going to be maybe a front runner for next year's Fed replacement. Scott Bessent's probably going to stay on as Treasury Secretary, or Secretary of Treasury. But yeah, I think the key level for today, I'll go back and just answer your question, would be 59.60. We take it out. There's room to fall. It could be a very noisy day. We've been really pausing at that 60.50 handle. So a lot of price action, right? I've got trades on. I actually was telling the team this earlier. I've got a trade on that's already running. It's not for the trading battle, it's my personal portfolio, but up at the highs, down at the lows. If I see prices pinned at 60.50 today, or prices pinned at 59.70 or lower, I've got about a 3-to-1, 4-to-1 potential trade opportunity that I'm hopefully just looking to close out. If I've got each one on, if I lose one, win one, I still walk away with like a 2-to-1, 3-to-1 reward to risk. So I like that trade for the day if we can get down to either 59.70 or get up to 60.50. I'm trying to surround the market.
Hey guys, can you hear me?
Hey Nick, you're back. Yeah, you're good.
I'm sorry guys. There's a big storm. I mentioned this like right before I started streaming. I was like, there's a big storm outside. Oh God. I'm back, and then I'm sorry if I missed much. Where are we at? Did Chris finish? Are we on the break?
I just wrapped up. Yeah. So I mean, you can toss the same question to Blake if he wants to run with a little bit. I'm curious to see his thoughts.
Cool. Good news is I'm pretty familiar with Chris's perspective just because we stream together every day. Blake, you want to share yours? If you want to share your screen,
Sure.
In terms of a general outlook for this Fed meeting, what's your thoughts on markets? Where's your focus at? Is it more on the currency side, indices? What are you thinking?
Well, my focus is, surprise, surprise, it's going to be on currencies. And the great thing about where we currently sit is kind of expectations versus where we're at and where we're currently at. So for those people that are traders that follow me closely, listening to our daily shows that we do and our broadcasts, you're very well aware I'm now, instead of being such a dollar bear, I'm playing both sides of the market. And I think I was just reading a piece of analysis this morning about the risk reversals in the dollar really changing, where people are not paying upside premium for euro calls or dollar puts, if you will. And so that really lends into my idea that I think the euro's gone a little too far too fast. I still believe that the euro's got a lot further to go for the remainder of the year, but I think that any type of pullback, major pullbacks, can be bought. And today might provide the fodder of that. And so let me start by just talking about what I expect out of the Fed. I think market expectations are that they think the Fed is going to, not only we have a 65% chance of a cut in September, I think people believe that the Fed now has the ammunition, with data starting to soften, with CPI looking a little soft, if you will, and obviously tensions rising, and you start to see weekly unemployment claims are starting to go up, and we're getting towards that 250,000 mark, that the Fed can start to open the door for further cuts, or more cuts than what's priced in. I think the market's expecting that. I don't expect that from the Fed. So what I'm hoping for is just a little bit more hawkish FOMC. Now, if that happens and we get maybe, we call it undovish. It's not as dovish as the market expects. It's maybe more undovish. That's going to give a little bit of a bid to the euro. The euro is going to be probably dropping down towards, now I know where my levels are because we do these levels every day with our traders. The level of support I'm looking at is 114.18, and that's going to be the level that I'm actually looking to be a buyer in the euro. Would be around that level, and then obviously if I'm wrong and we have some dovish FOMC, that's going to open the door for the euro to get back towards 116, where I'm going to be a happy seller. And the reason why I'd be a happy seller is because, if you guys haven't noticed, there are some tensions in the Middle East that are brewing, and it looks like, I mean, we could argue that it's just a matter of time before the U.S. enters into some sort of military offensive towards Iran. And if that truly is the case, that is the day that, should that happen in the next 24 to 48 hours, the dollar is going to probably catch a risk off bid. You're going to see the euro slump regardless of where it's at. So if it can make it up towards 116, I am a seller out there. But there's a couple other currencies that I really want to focus on, and one of them being, in the same light of the dollar. Let me get rid of some of this stuff here real quick. These are older drawings. This is the dollar yen. Okay. And so the dollar yen, I think, is in a large like triangle. And so if we actually break out to the upside, let me move this out of the way. I want to get that out of the way there. Okay. So if we break to the upside on a more hawkish FOMC, that means the dollar yen is going to take this level out. And then I actually want to be a seller up around 146. Let's just call it 146, 146.20. Because ultimately, if you just reverse what I just said a couple of seconds ago, I believe the U.S. is going to enter, from a military point of view and a stance, we're going to enter into this, or at least there's going to be a very high risk of it, into this Israeli-Iranian conflict. And if that happens, I believe the yen's going to catch a bid. And if you look at any other yen pair, you can go to the euro yen, Aussie yen, New Zealand yen, Canadian yen's real significant. We had some false breakouts. So they are primed for a reversal. That means they're primed to get some yen strength. So if we're lucky enough and we see the dollar yen on a hawkish Fed spike up towards that 146.20 level, I'm going to be on the short side. And the other last setup that I'm really looking at today, and it doesn't mean that I'm not going to do other stuff, because I'm a trader and I tend to, is the US dollar Swedish krona. This is a really, really great, what we call false breakdown. And so this is going to lend really nice into a, I'll zoom in a little bit here just in a second. Since we got this false breakdown right there, and now we're breaking out the other direction, any type of pullback on a dovish FOMC, I'm going to be a buyer. So I'm set up for either situation. What I hope we get is just some volatility. That's what I'm hoping for. And I hope Chris isn't, his initial comments aren't, succinct, where we get a little bit of volatility.
Well, even if you guys have a similar viewpoint, I like the way you broke that down for us, Blake, because you really went into the beauty of being a currency trader, where you're hand picking, which, just like a stock picker might really say, I think the overall market's gonna move higher, but here's the stocks I like. As a Forex trader, you're able to kind of select, even with a dollar, kind of some long, some short dollar exposure, you've got some ideas there. So we've got about 15 minutes here before we get the initial statement from the Fed. And then, of course, 30 minutes to following that, we'll get the press conference. Chris alluded to it a little bit earlier, but in terms of the way our actual trading is, because I want to get into it, make sure we can get through all the challenges here today. We're going to be basically letting these trades run through Friday, and whoever has at the end of that period the best P&L, which is a simple goal, whoever has the best P&L is going to be the winner of this battle. And so we have we have 3 in a bonus round, if we can get to it, challenges to get through. So I want to go ahead and just jump right into our very first challenge. We're going to play a quick little highlight special just to show everybody in the audience what our first challenge for these two traders going head to head is. Stay tuned. So there's your pick. We got a little bit of a Forex breakdown from Blake there. So maybe we can start with you, Blake. Dollar domination or deflation in terms of one currency pair. I know you gave us a list, but maybe in terms of whatever is looking most pressing to you right now. And Chris, you can also be placing your own trade at the same time. We'll come to you in just a to talk about it. Blake, if you'd like to just walk through whatever your setup is and then place your trade either on the screen or when I get to Chris, either way, whatever's more comfortable to you. What's most convicted?
Okay, my as I was explaining to you guys the way that I want to trade the euro today, I'd really prefer to buy the euro on a dip. And the reason why I'd prefer to do that is because, like I just said, I think the dollar's got a long way to go. And so any dip, really this 38% retracement, which really defines an uptrend or a downtrend. Fibonacci's are great. I've been using them since, I sat down with a protractor and printed out charts in 1998 to learn how to, calculate Fibonacci's. What I learned is when you have a shallow retracement of a 38% retracement, whether you're going long or going short, it really accentuates and reaffirms the trend is in place. And in this case, as I already told you guys just a second ago, I'm looking for that 114.20 level, basically 114.18, which is the 38% retracement. So what I'm going to do is I'm going to try to buy, the euro dollar at 114, and I'm going to put my order in here. I'm going to try to buy it at 114, 20, 21. I'm going to take a 10 lot position. If we can get down there, that'll be good for the day. And because I believe that the dollar is going to be sold. I think overall we're going to have ongoing dollar weakness. Whether it's and actually I'll just take a step back and just give you the bigger, broader view. Something I've said a lot publicly and in public forums and interviews and whatnot. The dollar is one of the most widely held currencies, if not the most widely held currency out there. We have in the United States, we have a president that's and a Trump administration rather that's rather kind of volatile, and so that volatility is really forcing a lot of asset managers out of the dollar and into other type of currencies. And the one that comes to mind is on the screen is the euro. And for those of you that are European, you're like, why wouldn't the hell would you buy the euro over the US? It's not because I believe that Europe is going to be this beacon of growth and hope, even though there's going to be a lot more fiscal spending from a lot of different European countries in the next few years. But it's more of a view of stability. And from an asset manager's point of view, when you're overextended in dollars, you want to shift some of those reserves into something that's a little bit more stable. So I think the euro is going to be a beneficiary of that probably for the next couple of years. That's why I think the euro's, and that doesn't take away the dollar's reserve status. It just means that the dollar is probably going to end up weakening, and we're going to see probably a 125 to 130 handle on the euro over the next 3 years. It's not going to happen tomorrow. It's not going to happen today, but that's why I will continue to sell dollars on significant pullbacks.
I like it. So it's a bit of de-dollarization, or at least kind of reducing exposure to the dollar bias. So you're looking to get long the euro dollar. Awesome. We'll go ahead and you can place that trade, get that started on your side, and then I'll move over to Chris Pulver. And same question goes to him in terms of most convicted setup now in terms of the U.S. dollar here. What are we looking at?
Well, I'm gonna base my currency trade around what I think the stock market kind of needs to do. I think, and again, the hard part is timing this thing through Friday. But I think that the stock market needs a little bit of catalyst to the downside. I think there's big levels at 59, 5905, 5900, 5905 on the S&P. So I'm going to do a pairs trade where I'm taking the dollar Swiss long and the euro dollar short. I'm letting the winner run. I'm hoping that, I'm trying to acknowledge that this typical FOMC fashion, and what happens a lot in Forex trading is the market can spike, below this dollar Swiss low and possibly try to run that stop. I'm trying to give myself a little bit more breathing room on the euro dollar. Same thing to the highs. I'm trying to give myself a little bit of breathing room to the highs. So if we come up and spike these highs, as long as I don't get invalidated, but I've got a much bigger reward than risk on these trades. So hopefully at the end of it, however this shakes out, I've got one side that's going to win. So I'm going dollar Swiss long and euro dollar short. So actually, what am I doing? I'm doing the exact same trade. I just fudged that up. I should have went long on both.
It's okay, Chris. You can correct it by now taking two more currencies short the dollar.
Hell, just go long euro Swiss. There you go.
Or just take the trade off.
No. What I'm going to do is I just have to pin this one around. So I'm going to go dollar Swiss long, and I'll pin this one to go euro dollar long. That's my bad.
We'll let you work on that.
I'm going to close that one now for $20 and then get back in. So I'm going to go long now. So we'll go take profit.
I was about to say, Chris, you're very long the dollar, which is awesome. But it looks
exactly.
it looks like you're.
I'm like, I want to see a long dollar, and I'm very long the dollar on two currency pairs, and I'm like pairs trade, and it's not.
So while you place that, let me just, for the context of the audience who may not have this wonderful 20 years you each have of experience. So Chris is taking the same. He's taking two currency pairs with opposite biases on the dollar, and he's essentially saying. You might say, well, why would you do that? Isn't that just going to nullify each other out? But the idea is if you get a big move on the dollar, whether up or down, you can play the volatility by saying, well, one of them is going to stop out most likely. But the one that doesn't stop out, the idea is, can I capture enough gain on the mover to materially make up for the loss that I'm going to take on the other trade? So love it. So we've got euro dollar longs and Chris Pulver setting up the kind of pairs trade with the euro dollar and the dollar Swiss. So got our setup there.
Nick, can I ask? Do you mind if I
go for it?
Do you mind if I ask a quick question? So, Chris, we do have the Swiss National Bank tomorrow, and they are expected to lower rates. Now, I have a different view on the Swiss National Bank because they are going to be, depending on how far the Trump administration wants to push tariffs. But at their tariff rate, I believe it's 25% or 28%. Correct me if I'm wrong. Somebody in the comments can. But that's a huge burden on their luxury market, which is a huge part of their GDP. So they obviously because of what's happening in the Middle East, you're getting this natural buying of Swiss francs as it is. I wonder if they're going to really start to talk, because remember we have Schlegel, who's the new SMB chair. It's not Jordan anymore after 10 years or whatever. And if he starts pushing the negative rates narrative just to get rid of, to dissuade people from buying Swiss francs, that'd be a real big swoon for your dollar Swiss. That would be a real big reason for the dollar Swiss to rally or the Swiss franc to sell off. Is that something you're thinking about?
Absolutely. And I mean, we've talked about this, but some of my bigger positioning trades in my Forex portfolio has been carry trade on the Swiss. So Aussie Swiss, CAD Swiss, Euro Swiss, Pound Swiss, New Zealand Swiss, Dollar Swiss, I'm long. helping a little 3 to 5% holding swap, but also like last year having that run all the way to 9,200 on the dollar Swiss, that made a good chunk of profit. I'm back in the dollar Swiss again with a break even. This is a like personal portfolio stuff at 85, going after a break even around 80, or I'm sorry, breaking at 85, going after this like this inefficiency around 87 to 87.50. But I had about 30 positions long as this was a range, and I bought low enough for my break evens around like 86 and change. I took it all the profits off at 92. So here we are again. I also wondered if gold has been in a long time correction, a long time bull market. These last 2-3 years have been very bullish for gold.
Chris,
If you go,
Chris,
yeah, go ahead.
let me stop real quick on gold because we got a challenge for that one.
Oh, okay, that's fine.
Let's
That's fine.
roll the challenge really quick for gold, and then we'll let Chris take off right from where
Okay.
we pick up. Right back after our next challenge, starting here. All right, so you saw it
All right.
there. Simple prompt, long or short on gold. Keep going with where you. I didn't mean to interrupt you, Chris, but
No worries. So what I'm looking at is, Nick knows this from our day-to-day streams, but the last time we've had a gold run this far above the 200 moving average was back in like 2009 to 2011, when gold stretched about 30+% away from the 200 moving average and ended up going over 600 daily trading bars. We're at 430 plus right now. I think gold at its best is going to be testing tops, not necessarily breaking tops. So to me, I think that this period of consolidation on gold is still a thing. I think gold's going to maintain a lot of bid, but this little correction that we've seen down to like 30, 3,200, 3,150, we might come up and poke the highs on gold, but then fade back down. I think gold just stays bid up here. So honestly, I could be dead wrong, but if we go up to these highs in gold and fade, that wouldn't surprise me. I definitely want to be buying gold as low as possible to kind of reallocate and re-up some longs on gold. But I think the Swiss is also tied to this, as Blake was saying. Like safe haven, we've had the flows, but we have had a Swiss franc that has been abnormally strong with a very quiet Swiss National Bank for years. And if you look at the historical side of like 30-year charts on the retail side of Forex, those Swiss pairs are sitting at historical lows. Aussie Swiss near historical lows, New Zealand Swiss historical lows. The crash we saw summer of 2024, the flash crash in 2022, COVID in 2020, all these levels have been tested where the Swiss is essentially one of the strongest baskets in all of currencies. So I do think that a little bit of we've gone from Blake, what did we have, like 0.75% like positive to we were at negative 0.75, went all the way up to like 0.75 positive. Now we're cutting to 0.5. Now we're cutting to 0.25. Tomorrow morning is supposed to be cut to zero. And if they're going back into like zero or negative interest rates, I'm hoping that helps kind of ease the strength we've seen. But the Swiss has just maintained like a little bit of correlation with gold and a safe haven bid that's kept it very strong. So I look, man, I would love to get out of some of the trades. I'm not like upset by them, but certainly having roughly like a manageable drawdown for 2 years in carry trades. I'd love for those pips to finally start showing the right direction, positive pips and the carry. That's the double whammy and multiplier that I signed up for when I took those trades back in 2023.
Awesome. Love the breakdown, Chris. So in terms of our prompt here, gold, long or short, you got to choose one. I guess totally up to you guys if you want to allow kind of also doing some sort of pairs trade, if that's something you want to do on gold too, Chris. If you want to do something with like silver, totally up to Blake on that. But you will give you a second to think through that. Blake, I'm wondering, same prompt to you. Do you have an idea on gold? Do you have a bullish or bearish bias?
Well, when you consolidate at highs, that's not bearish, just so everybody knows, especially after such a huge rally. So I'm with Chris on everything he had to say. Obviously, we have the FOMC in like literally less than 2 minutes. So what I'm going to do is I'm going to put in a buy order around the 618. I like to trade around the golden fibs. So I think a little dip below these lows at 33.50 would allow a little bit of a long opportunity. So in other words, if we drop here, post FOMC, we get a little dip to 33.50. I've got an order already out there. I'm not going to be buying it. I'm not going to be buying or selling anything a minute ahead of FOMC.
Sure. So you got your orders out.
Yep,
bullish
it's
on
out there.
pullback. Got it. Okay.
Yep.
Awesome. Chris, what are your thoughts on it?
I'm thinking I'm going to look at taking a buy trade on pound Swiss because the Bank of England also has a rate decision tomorrow. They're likely going to pause, and the Swiss is likely going to cut. I want to see if that gives a little bit of a nudge to the pound tomorrow. So I'm just going to take that independent trade. I can't really pair that because it won't match volatility. So if I went like, pound Swiss long, Euro Swiss short, the volatility is not going to match. So I'm just going to take a stab with a pretty tight stop on pound Swiss. I think there's going to be some noise, but I'm going to try to go long on this to get back to these highs. I also like this inefficiency back around like 1250 to 1350. So I'm going to take a buy trade on, let me see if I can get this thing hit to like 1305. Let's go lots 1 and take profit. We'll do it based on a price action. So 1300 and stop loss. Hopefully not too much noise, but maybe like a 108.50 stop. Let me see what that compares to in pips. So I'll do price should be 1.1300 and stop loss will go to 108.50. I just want to see what my pip numbers are. All right, so stop loss.
FOMC keeps rates unchanged. Just
Yeah.
Yep, just dropped. So we had unchanged, pretty much as expected, right? Right, Blake?
Yeah,
Right,
as expected, but the dollar is showing a little bit of weakness. So I'm going to say, bring it.
Okay, so
I'm
going
going
to
to say, bring it. And while Chris is
bring it. All right.
Yeah, go ahead, Chris. Right. I'm sorry.
I'm long pound Swiss. Right. So I bought in at market 109.93. I'm going up to my pocket around 1300 and a stop loss at 108.50. So net it should be about a $1,700 risk for a 37.60 upside. Obviously, if I get the right direction, I don't have to hold it all the way, but I'm going to buy pound Swiss for that.
Okay, got it. So you're long pound Swiss, and you're choosing not to pair it this time. So just put a tight stop on it.
Just tight stop, exactly.
Got it. Okay. And Chris, do you have a trade on gold? Do you have one you want to place? Or
let me take a quick look at it. I'm not going to skip it, man. Not for the trading battle. Come on now. I think gold. Blake, you bought gold. You got a little swing trade going. Yeah.
He's got a buy limit.
I don't have gold right now. I just sold some euro though. By the way, they lowered GDP estimates. They raised inflation estimates to 3%. That's a stagflation for those of you guys aren't following along. And I just sold some euro just a bit ago. So yeah.
Very good. Okay. Yep. A little bit of stagflation worries. It's been the theme of the Fed here recently. So stagflation worries, does that make you any more bullish gold, Chris, or are you going to take the other side of it?
I'm thinking, honestly, I mean, Blake's looking for a dip to buy. I'm actually looking for like a rally to sell. I'd like to sell this thing at like 34.75, 3,500. The problem is I don't think we can place limit orders here. Can we? With the
yeah, I've got limit orders all over the place. Just look underneath the buy sell, and then right in the middle of your screen it says limit.
Yeah, I just didn't know if it's going to actually take the trade. So I would try to sell to like 34.95. Just want to make sure I'm not tying up too much margin here. And then take profit if we get filled there. I'll go back down to like 3,400. So if I limit sell 34.95, there we go. And then stop loss to be around 35.50 or so.
Perfect.
Okay.
All right. So we got some orders out there on the table. We're taking a look at some currencies, looking at gold here. We've gotten through 2 out of 4. I'm going to call it because I want to include the bonus one. That's where I'm pushing through these. Our next challenge, we'd go ahead and get this ready, and then we'll throw it back over to Blake. But here is coming up challenge number 3. So Blake, you've been heavy on the currency so far, and you saw it on the screen there. Challenge number 3 is to trade the NASDAQ, long or short. Feel free to trade it however you'd like. Put email orders out there if you have a bias, whatever you would like to do with it. What's your thoughts on NAS here?
I think you sell it, and I'm going to get short. So let's just go ahead and do it. And can I just forget the NASDAQ? Can I just sell Apple? Can you just let me do that? If I can just do that, I'd be happy with that. Just kidding. I'm messing with you guys. You guys are going to play my game right now.
I'm pretty pessimistic on Apple.
I'll take your NASDAQ trade if you want Apple. I'll give you that.
No, I just shorted some NASDAQ. By the way, as you can see, I'm short a little bit of euro from earlier. I shorted it in the 20 as soon as that headline came out. But yeah, I'm going to short a little bit of NASDAQ because look, stagflation is not good for stocks. Period. End of story. So I'm going to be on the short side of that. So I got three lot position short NASDAQ right now.
All
at
right.
these levels, exit levels.
Straightforward enough. I think makes sense. A little bit of stagflation, definitely not favorable for the NASDAQ as the Fed gets caught between a rock and a hard place, doesn't know what to do. What do you do in that situation? Whenever Powell gets asked, he kind of redirects the question. I probably would do the same in his shoes. So yeah, anyways, NASDAQ, you got a short bias on the NASDAQ. You're short the euro dollar as well.
I just
love it.
I just closed it. Sorry. Closed it. I just closed
euro dollar took profits on it.
we got the press conference in 30 minutes. I'll reestablish if I have the, but I'll stay short the NASDAQ.
Fair enough. And so for listeners who are just tuning into the show, let me just remind everybody who's just getting here the context behind what we're doing here. We are trading the lead up and for the next few days. The way this will work is the way the challenge goes is we've got 4 challenges for these guys. They're trading head to head. And at the end of Friday, whoever has the best P&L becomes the winner of the trading battle. So relatively straightforward. We got a couple prompts for these guys. So we've gone through some currency pairs. We've gone through some gold. We've gone through some NASDAQ as well. So very good stuff. And just a quick reminder to everybody who's listening, Blake, Chris, and I, we have been on the trading battle time and time again. We're big fans of what they do here. This is promoting transparency in the trading space. It's promoting, bringing on real traders who actually have verified track records and people who have a lot of veteran experience. I mentioned this earlier. The combined experience of the 3 of us puts us at 50 years of trading experience. So if you want more of this type of content, everybody in the audience, do me a big favor. Do Blake, Chris, myself a big favor here. We're big fans of the trading battle. We want to ask for you to also make sure that you are subscribed to this channel right now. That will tell YouTube to bring you back when we do the next one. If you're enjoying this, if you're getting value, just a quick plug, make sure to subscribe and hit the thumbs up button on the stream if you are enjoying it so far and want YouTube to promote more of this stuff your way. Chris, same thing to you. NASDAQ, are you feeling bullish, bearish? I love this because you and I, we talk about the NASDAQ, but I love being on this side where I can kind of be like, okay, now place a trade, right? Because it's a little bit hard, even if it's not at a level. But if you had to take a position, are you feeling the same way? Are you feeling the opposite to Blake?
I think I'm going to go short NAS, long Russell. I'm going to pairs this thing and try to go after a net winner. I think that's a good way to pair. They typically have enough equal volatility where the NASDAQ's a little bit more jumpy than the SPY or the Dow. So I think if I pair it with the Russell, I think that's a pretty good trade for I can go both directions, hopefully have one winner. So far, I mean, we're seeing noise and it's been very choppy here these last few minutes. We had a fake out move to the upside. It's faded right back down to where it started at 2 p.m. So I'm going to get a short NASDAQ, long Russell, and see which one ends up hopefully giving me some net direction for Friday.
Okay, and just to clarify for the audience, Chris, you're again kind of setting it up so that you have a tight stop with a wider take profit, but opposite directions. Are you long NASDAQ? So you're shorting NASDAQ,
short.
buying Russell, right?
Yep, I'm going to go short.
Yep. And so everybody in the audience, how that trade plays out, because he's trading the pair, is he's saying if the market itself moves across the board very much to the upside or very much to the downside, one of those trades is inevitably going to likely stop out. But the one that runs, if it's big enough, will pay for the loser and net a profit. So he's playing that. By the way, just for fun, you can actually do the opposite. If you think the market's not going to move very far in either direction, you could reverse the idea there and actually put a tight take profit and a large stop loss on both trades if you think both are most likely to just go back and forth. So there's all sorts of different ways you can actually do that. A lot of traders aren't familiar, but Chris is a master when it comes to pairs trading and volatility trading. That is his bread and butter. So love it. So we've got NASDAQ trades going on. We've got Russell trades going on. We've got euro dollar trades going on. Blake, you mentioned before we move on to our last prompt, you said something interesting. So for everybody who's watching and of course trading alongside at home, break that down a little bit more. What you said about how, okay, we just had the announcement of the rates, right? But then we have the press conference to come shortly. Tell us a little bit why you actually closed out your euro trade for a profit there and are now reevaluating for the press conference. Can you just give us an idea of what you'd be looking for in the press conference?
Yeah, I'm gonna. Well, first of all, as far as Fed Chair Powell goes, he's really quite masterful at walking the tightrope. He's going to try to create, and you can actually tell by the statement, the way it was crafted, that he's trying to create as little. Well, it's one of their mandates. stability and financial stability. And right now, he's trying to create the least amount of ripple as possible. But the press conference, the statement will be one thing, but we're going to be watching what questions are being asked from the from all the reporters, because reporters are notorious for trying to catch them off guard. The fact is that we have GDP outlook has dropped, but inflationary estimates have risen, and the question that people always ask, what's the Fed going to fight? Are they going to fight slower growth in the economy, or are they going to try to kill inflation? And if you ask any analyst, and the majority that I've talked to, they will tell you universally that they will fight slowing economy. And I don't agree with that. I do not agree with that. Unless the employment data gets completely upended, and we really start to see a massive layoffs, unemployment, and it becomes more of a more problematic than it is right now. I don't know if you guys have seen jobs reports. We're creating basically anywhere between 0 to 100,000 jobs. You can, and that's subtracting all the revisions if you want. So it's not like the jobs picture at this point is bad, but the inflation is a problem, and it's like getting the toothpaste back into the tube. They're having a very difficult time doing it, and the way they're going to fight that is not lowering rates, and that's why I think this is going to end up being a little bit more. He's going to have to tilt a little bit more hawkish than the market likes, and that's going to weigh on the stock market. It is going to weigh on the dollar, and now I know my break point, because if the euro breaks through 114.70, it's going straight to 114.20, which I'm going to be a buyer there. So I'm going to sell it below the lows, and hopefully tonight I'll be able to buy it at 114.20. That's what I hope. Yep. That's how I'm trying to play it.
Yep. And I just want to ask you guys, before we continue with the trading battle, we didn't outline this when we talked about it before, so we'll have a gentleman's agreement on this. Post the stream ending, what are you guys' thoughts on trade management? Place new trades, or just manage the existing ones, add to them? What do you guys think is, how do you want to handle that?
Considering tomorrow's the holiday, I think there's not really much we can do. I mean, forex wise, we can manage. I mean, I've got stop losses and take profits on all of them, so I'll spot check. I mean, we have our thread, so we can talk offline through our email thread. Like, what are we doing? I mean, if I have a take profit hit, then it's done and closed. I'm probably not placing new trades tomorrow. I think my goal is, as we're doing this trading battle, trades are in today, and they're going to ride through Friday.
Sure.
I'm with you, Chris. And then we can manage them, right?
Yeah, exactly.
We can manage, not open new ones between now and the end of the week.
Sure. I think it's fair.
Yep. That way, everybody who's in the audience here gets to see all the trades that got placed. Love it. And Chris, you just showed it on the screen. Could you pull that one more time?
Yeah,
Here's just an update in terms of current positions. We can go to Blake in just a second with his as well. So Chris has got his list of trades on the screen right now. If you're watching at home, feel free to pause if you want to take a closer look at it.
So that's net positive.
Yep.
That's just down a little bit. So what I did is I did a gold Aussie and gold euro trade.
Okay.
Gold Aussie is up a little, or down a little bit. Gold euro is up a little bit. That's kind of my pairs trade. Pound Swiss I went independent on, and then I also did the NASDAQ 100 with the Russell Growth, trying to pair those up as well. So the only one that's kind of my outlier would be Pound Swiss. I'm just hoping that pause for the Bank of England, cut from the Swiss National Bank, that thing shoots up. But everything else is kind of paired off. For as long as my winners can run and hit my take profits, I've got roughly a 2-to-1 on all of those. So we'll see if there's enough volatility to land some of these profits by Friday.
I like that Pound Swiss trade personally, Chris. That's I like the layout there. British Bank of England versus Swiss franc there. Blake, I guess we could throw it over to you. Just a quick pulse check in terms of current positions you've got on. You closed that euro trade, took some profits on that here, and you're sitting in the NAS short, right?
Yeah, and I'll sell a little bit of euro here, just because I don't know how long. And this is I don't know. That's why I'm going to ask. I'm not sure how long this trading battle is going to go. So I want to make sure I have a euro short, because ultimately I'm going to be looking to take profit somewhere down around the 114.20 level. So I think the euro trades lower from here today. So I just put a trade in the euro short, 10 lot, and I'll depending on how long we're going to be here and doing this battle, I wanted to make sure I had that exposure at least for the next couple of days.
Yeah, that's a good call there. So I put in the euro short position, got a short on the NASDAQ, and game plan I think is to go at least for another 15 minutes here and then call it at the start of the press conference. Just give people a chance to go watch that on their own as well, just if they want to tune into Powell. Okay, so we've got 3 out of 4 prompts here. That gives us 15 minutes to go through our last prompt, as well as maybe just kind of coast in and talk about what we're looking for. This is my favorite prompt. I think Blake mentioned in our email chain that it was also his favorite here. So the final prompt, let's go ahead and roll it on the stream. Got you the high five. Yeah. Coming up next, stay tuned. We got our final prompt, and this is a fun one. All right, so it is the ambush round. Of course, this is a notorious trading battle challenge where essentially you get to each pick a asset that the other person trades. Now, there's a niceness level to this. Like you could send off somebody to trade, a random low volume ETF that nobody ever trades, and that would just be mean. Or you could be kind of nice and pick something that is, don't do that though. Actually, it would be really unfun. But choose something, of course, that's liquid, and then throw it over to your opponent for them to have to place a trade long or short. So, for example, it could be the dollar yen. It could be gold. It could be silver. It could be S&P 500. It could be a stock. It could be literally anything that is tradable within our broker here and that is relatively liquid. So, anybody want to take the gentleman's shot of going first?
Chris,
Blake,
you don't want me to go first, do you?
I was going to say I don't know what you're going to throw at me. I'm looking at some crazy exotics, but go ahead, Blake. I'll give you first dibs.
All right, Chris, you have to trade oil today.
Oh God! All right.
Good luck, buddy. I'll
fair.
Show myself out now. All right, see you guys.
Yeah, right. Fudge. Okay. Oil today.
It should be USO USD.
Yeah, I see it here.
Yeah, okay.
Gosh.
Okay.
Let me see. Is there anything I can pair this with? All right. Well,
Brent.
I could do Brent versus US, but I mean we're running into that resistance. But I mean it's like any escalation. I don't know. I think I'll take it. I'll take it tight. I think it's fair. It's a one asset trade. I can pair it with maybe Brent. If you don't mind, I'd sort of rather than trying to put a tight stop loss on what's crazy volatile. I mean, we're getting some pretty big swings every single day. So I will go. I part of me feels like this whole thing has been like priced in a way. I mean, we're sitting right at the backside of this resistance zone. I mean, if oil, this is where inflation gets to be really tricky. If all of a sudden gas at the pump goes up, U.S. consumers know it. That's when inflation all of a sudden, it's not for another month or so when we have inflation data, but everyone's going to notice when, dollars per gallon goes from 319 to 379. So I just don't, I think there's just heavy amounts of manipulation here. I'm going to go short U.S. oil and long Brent crude as a pair and just try to make the numbers work. So that's my pairs trade. Blake, for you,
okay.
How about this? If I'm going to do a pairs trade, I'm going to give you two exotics. You said dollar krone, right? Or SEK. Yep. And so I want you to pair that with the peso. I want you to trade peso and krone and figure out how you're going to turn some profit there.
Oh, golly. All right. All right.
Everyone in the audience, this is what 20 years of trading experience. This is what that looks like, giving each other kronas and oil to trade. That's that's what we're dealing with.
Yeah. Okay. Well, first and foremost, I think both of them go higher. The question is which one's going to go higher, further, farther. I've been since the beginning of the year and since Trump won, I have long said, and this is when the dollar max was, above 20, and I have to add that to let me make sure I add that over here. Just let me pull it up and let me grab it. So I've argued that the dollar max was going to trade to an 18 handle since he got elected, and we have traded, and we are currently just above 18. I still think Mexico is going to continue to do well in any negotiation. So therefore, I'm going to sell. I'm going to sell dollar MEX as much as I don't want to, but I still am more of a Mexican peso bull overall. So I'm gonna sell 2 lots of dollar MEX at the market, and let me make sure I put at the market. I'm going to sell 2 lots, but I'm also going to buy 2 lots of the U.S. dollar Swedish krona, because I think the U.S. dollar Swedish krona is, as I've explained to you guys, it's a false breakdown. It's going to be a breakout to the upside. So I'm going to go long 2 lots of the US dollar Swedish krona. Again, this is just because I'm more bullish on pesos, less so on Swedish krona. So I'm going, short dollar MEX, long Swedish krona. And I guess if I could buy the MEX SEK, MXN SEK, that's in essence what I'm doing. I'm doing that. Yep. There you go, Chris. That was a good one.
I like it.
Yeah,
nice.
those are some good. Those are some good picks. In terms of where we're at here. So, Chris, did you get those orders punched in for?
I'm getting the final one in for. I'm going Brent. I'm going long Brent, and I'm short U.S. oil.
Yeah, oil is a tricky one. I mean, oil is always a tricky thing to trade. It's very, very susceptible to geopolitical risks and demand factors due to global economies, and it is a fickle beast, to say the least. It moves quite a bit. Just a reminder quickly to everyone who is tuning into the stream, we're counting down the minutes here to the press conference with Jerome Powell. We've been doing a trading battle here for the last 50 minutes, placing trades ahead of the event like crazy people. But of course, doing a little bit of fun trading back and forth, little challenges to go through. So we just hit through our 4 challenges. I just want to ask if you've enjoyed this so far and you're enjoying it. We're not done, but I do want to just remind everybody to hit the thumbs up button if you're enjoying this so far, and subscribe to the channel to make sure that for future live streams and battles that we're doing, you can be a part of them as well. So we've got a whole set of trades. Blake, I want to ask you, because clearly, oil was a wild card for Chris that you picked. I'm just curious. You don't have to necessarily place a trade on it, but what are your thoughts on oil given the super high volatility it's had? I saw oil volatility. I found some ETF that tracks oil volatility, and it was like up dramatically. Of course, we see that in the price action as well. You think this thing has more room to keep going higher? Could lead, a lot of times the dollar can kind of move in tandem with it. What are your thoughts on that?
Well, so let me just talk technical. So first of all, if you guys didn't know where it stopped and why it stopped where it did, this is the 88% retracement and 127% extension, which stopped up here. Let me move this out of the way. It stopped us up right at where we're currently at, basically. And so from a technical point of view, we're where we're at for a reason. Now, I know it's an impossible trade. That's why I picked it for Chris, because it really is going to be, it is truly, it's going to be the reason why it goes higher from here is if the U.S. enters this conflict. And if you truly think that that's the way it's going to be, there's a good chance that crude oil is going to trade north of 82. And then, but if the U.S. can broker a truce, if President Trump can broker some sort of truce between Israel and Iran, we're going to be trading back at 62. So I think it's really you are a slave to geopolitics. That's why it's such a hard trade. That's why I threw it out at Chris. But I wanted to explain why I did that. And so, Nick, to answer your question, do I think it can go higher? Absolutely, I think it could. And if it does go higher, one of the things that is a precursor to any global recession you're ever going to see is just higher energy costs. And
Absolutely.
so, yeah, if we have if we have that happen, the Fed is going to be dealing with not only a little bit of stagflation, but a lot of stagflation, and that's going to be a problem for stocks and everything else. So,
years ago, Blake, when I was first getting into like studying macro data, like as closely as I do, all these years later, one of the big things that I always heard was that little statement, right? The concept of most of the major recessions that the United States has seen were preceded by a dramatic rise in oil prices. I have an answer, of course, but I want to get from you guys. Why is that, right? Chris, you also nodded along that. Why generally is that the case? Why in 2022, when we saw Russia invade Ukraine, that shot oil prices and everybody forecasted a recession? What's the method there? What's the methodology behind why that is?
I think that a lot of the shock that happens in the markets is not so much what the like underlying is doing, but it's the rate of change and the shock factor that happens. So when we see, I mean, that's the tricky part about oil is that this is conflict related geopolitical tensions, and it immediately triggers some risk off, and all of a sudden you start looking at data, you start questioning the integrity of the rally. I think that's why oil always has like this kind of dipstick check with the markets, because if things are going to get worse or more uncertain, the market tries to price that in. That can usually, fade something that's been like risk off goes to, or risk on goes to risk off. I think 2022 was not so much oil. I think that was more of a mean for the bond market, and I think that was a massive deleveraging that had to happen in the U.S. The bond market was basically the one that was turning the lowest. I think it just dragged equities with it. But we were at a point where from 2020 to 2022, we raised rates at the fastest pace we've done. The whole world threw $6 trillion at the economy to buy its way out of COVID. 2022 to me wasn't really a spike in oil. I just think the timing was terrible. I think the timing was terrible to have a huge spike in oil prices. Now a conflict that's going to be affecting the Eurozone, whether Trump and Putin get along or not. And it was just one more thing to throw on top of a potential like risk off event. So I don't know, Blake, maybe a different angle, but it's interesting how the correlations have happened that way. I just think it's the rate of change that the market finally starts to notice, and having oil spike 45% in about a month is a lot of rate of change in no time.
And real quick before you follow up with that, Blake, let me just also mention when you talk rate of change, another one that's really popular to talk about rate of change is yields, right? Because yields where they are not necessarily amazing or horrible, but if they were to rapidly move higher or rapidly move lower, that rate of change plays a big factor in what it's actually telling you. Okay, so sorry, didn't mean to cut you off, Blake. Oil,
No,
preceding recessions, yeah.
So if you talk about crude, I think there's always a fine line, and you can say it's at 80, you can say it's at 60, it's at 50. There's always a fine line where lower crude prices is good for the economy. At some point, lower crude prices would signal that there's lack of demand, and it's a growth concern. Same thing to the upside. Crude can rally, and the market say, that's a good thing. Until it's not. Once energy prices get too high, then it starts to pinch off the consumer. Now I'm gonna tell you guys how it is. We as traders, we happen to be blessed to be traders. We happen to be blessed to live like in probably where you guys live, and many of you listening in right now, some of the nicest places in your region where you currently live. You have the money to trade. But let's talk about the other, 60 to 70% of non-traders that are just people. They live near the poverty line and they live paycheck to paycheck. And so when gas prices, again, where you live and where I live may completely be different. But let's say a gallon of gas is $3.50, then it goes to $4.50. That extra $30 to $60 or $80 that you used to spend every month for groceries at Walmart, at McDonald's, whatever you did with that extra expendable cash that is now being spent on energy costs, that will tip the scale. And that's why there are certain levels. And that's why, for those of us that spend a lot of time doing macro analysis and knowing where these levels are at any given time, like I would be worried if crude oil gets above 80. If it gets above 80, it's going to be it's going to be a strain on the consumer that's already strained because of inflationary pressures. So again, that there is a fine line, and it does vary, and it's more of a gray area. It's not a for sure. Oh, over here gets above 80, all of a sudden crude's above 80, the market's tank. No, but that point is where it really starts to pinch. And so those are things. That's why, high energy costs pinch the consumer. A lot of economists believe and have believed since the Alan Greenspan era, and that's where QE really was born, about trickle down economics. Well, it's great, but not for the 90%. It's
Yeah.
great for the top 10%. Not always great
You
for
mentioned, that rise in oil prices can lead to inflation, which is the tax that everybody feels, right?
that we're
Everyone,
already feeling.
yeah, right.
That
They're
we've
feeling it. Yeah.
felt.
Round two would be even more rough, So
Yep.
great points and great breakdowns on that insight about oil prices and their impact on the overall situation. And to Chris's point, I do think that rate of change plays a big role in terms of that dynamic level that you were talking about, Blake, too. So great stuff, guys. We are coming into the close of our duration here. For listeners, if you've enjoyed this, do me a big favor. I mentioned this a couple times already, but we're trying to kickstart and get the trading battle back online here with some great content to come your way. So I want to encourage, if you have not already, make sure to subscribe to this channel that you're watching on right now. And also real quick, we'll go through a little bit of where you guys can follow up and find each of our special guests here. Chris, where can people find you?
You can find me every day in a handful of services. You can find me every day with A1 Trading, youtube.com/Chris Pulver. You can find me at Prosperity Pub, Trading Pub, and elsewhere.
And your own channel.
I'm kind of all over the place, but I've been doing this for a long time. A lot of stuff I do online, socials are all trust content. I run data services. I trade with thousands of people every single day. And I'm always happy to come back in. We've been working with the Trading Battle team for a long time. Nick, you for a long time, Blake as well. I'm out there to help traders. At the end of the day, I'm a retail trader. I say this all the time. If I can make money in these markets, so can you. I really mean that. I've got tons of strategy videos in Forex, in options, in equities, just peruse and you can ask. And I've got Discords and Telegrams, and I'm out there to help. I think at the end of the day, trading is a skill that nobody can take away from you. And if you can manage risk, there's profitability or profitable opportunities on the upside all the time. And I've said this now for years, and I really mean this. Tools, resources at our fingertips are getting as good as they've ever been, and they're going to continue to get better. Fees are as low as they've ever been. It is a great time to be a trader. I don't want to be doom and gloom, but if the markets are going to be, ripping to the upside in a global melt up, it's nice to be an investor. If the markets are going to be chopping sideways, it's nice to be a trader. Having that ability to trade up, down, sideways and make money, whether the market is in a flat sideways market, up, down, maybe 10% plus or minus, or just a straight rip your face off to the upside by 20-30%. It's still nice to participate, and it's still nice to certainly be growing your accounts. It's not that hard to do it, but you got to manage risk. And following somebody like Blake, like Nick, anybody that's going to be on here as a panelist in the trading battle, our job is to do the right thing, make money in these markets, and nobody can take that away from you.
Love it. Love it. Great stuff, Chris. And again, we've got just a quick reminder to everybody who's watching who may have tuned in late. So the way these trades that they've placed through the hour here are going to go is we're going to let those play out until they can modify them between now until Friday. But the final cutoff for P&L is going to be Friday at the end of the trading week. We do have kind of some markets closed tomorrow with the trading holiday. Some will be open, some will be closed. But let's go ahead and also thank our other special guest here, our other contestant. Blake, what's the best way people can find you?
Oh, no, thanks for first of all, thanks for having me. And I agree as far as everything that Chris said. From a trader point of view. Look, I started trading at the ripe young age of about 26. I got my Series 7 when I was 25 in the 90s. I was turned stockbroker, turned trader in 97. No, actually, November of 96 is when I first sat down and block trading. I've learned a lot, and I teach every day, but I trade a lot, and I trade. I've done prop trading for firms out of Florida and New York for about 4.5-5 years with unlimited buying power. A bunch of handpicked traders put together just as I was starting Forex Analytics. But now you can find me at Forex Analytics. We have a great trading community. If you're involved in our community, you're also in the chat room, which you're going to find me about 14-15 hours a day. You see exactly what trades I'm putting in, when I'm getting out. But it's not just me, it's a bunch of other traders. We have analysts at Forex Analytics. All of our analysts have even more experience than myself. I have analysts that have been on trade desks in Japan, ones that have been on the trading floor and on the Life Exchange. Great analysts, and we're always around talking to people, and because everybody's got to start somewhere. And I'm with Chris on this. This is a skill that as a trader, you and as an analyst and learning about the markets, you're going to carry with you your entire life. I have who's not here right now next to me, which Chris has met actually in person in Salt Lake City. My youngest son, who just turned 18, he's been sitting next to me. I've mentored another kid that works for an RIA for crypto, funds, and he still does some work with us at Forex Analytics, and he's been with me since he was 17 years old. Before he moved to Chicago, he used to sit right next to me at my desk. This type of education, you have to take advantage of the technology that you have. We can be in the same room. We can be talking and sharing ideas, and that's what it's all about. And I'm glad to be part of the trading battle. I think it does bring a lot of transparency to what we do, and it allows you, the viewer at home, to get to experience live what it's like when we're actually in the thick of it. So, and it's been my honor to be here with the two of you guys, both Chris and obviously with Nick as well, who's very respected as a trader and what you do. So.
Yeah, well, again, I think it was a value packed for the three of us and likely for the audience as well. I mentioned this a couple times, but with the trading battle kind of coming back to life here, they took a hiatus and kind of ripped everything out. We've built back what I think is an even better show than before. So we're glad to have great guests, plenty of talent coming on. It's going to be a great, coming period of time with many shows ahead. And as you mentioned, Blake and Chris, it's to me, it's the golden era to be a trader at home. Yes, you have algos trading the microsecond charts, and you have all this, brilliance on Wall Street that want to take your money. But with a level head, as Chris mentioned, retail traders, there are some edges that we have that they can't take away, right? Just, being able to keep a level head in all the craziness this year has been a major edge. If you've just not freaked out this year, you probably did okay. If you were over leveraged and being silly, like many even hedge fund level players were doing, you can totally screw yourself up. So there are some things that we can explore together on the trading battle here, which is kind of by traders for traders, true and true. And so, as both of you guys have mentioned, there's a tremendous amount of free and great priced products out there that can help traders at home take their stuff to the next level. But for starters, I would encourage everybody who is watching to add 3 subscriptions to your subscriptions list. The Trading Battle, which you're watching right now, Chris Pulver and Blake Morrow, all that content on YouTube is available at your fingertips at no cost. It's great value. You can find them on socials. They have, Twitter, they have YouTube, all that stuff. And you can keep up to date with what they're watching in the markets. Guys, that's going to wrap up the Trading Battle. Again, I thank you guys both for being here, and for everybody who has enjoyed the show here. We will be following up and making posts on the Trading Battle here to keep everyone informed on who our winner of today's battle is. Chris, Blake, thank you guys for joining us for the first one back.
Thanks for having us. It was fun. Thanks.
All right, guys. Thanks. All right, we'll go ahead and shut down the stream. Enjoyed it. Thanks, everybody, for tuning in to the Trading Battle, and we'll be back with more battles to come your way. See you guys next time.